For many Americans, rising healthcare costs are a major source of fear as they plan for retirement. According to a recent study, 2/3 of Americans have not calculated what their healthcare costs may be in retirement. Many are simply not prepared for the high cost of medical care in retirement that increases annually. Are you a part of the many Americans that believe they can rely on Medicare? Unfortunately, Medicare only covers a percentage of health-related expenses, not including eye exams, LTC, dentures, or hearing aids. Most retirees pay large out-of-pocket healthcare expenses. According to an AARP study, Medicare beneficiaries aged 65 to 74 spend $2,920 a year in out-of-pocket expenses, while those aged 75 to 84 spend $3,815 a year. Retirees 85 and above spend $4,615 a year. According to the Center for Retirement Research, retirees can expect to spend 29% of their annual income on healthcare. It is critical to include healthcare planning in the retirement planning process. Without the proper strategy, major medical expenses can easily wipe out retirement savings. Your plan should ensure that medical needs will be taken care of without adversely impacting your retirement lifestyle or becoming a financial burden on your family. There are infinite ways to address healthcare costs. The solution you choose should be personalized to meet your needs. These are a few popular options many consider. Purchase long-term care insurance. Long-term care insurance is designed to cover costs related to long-term care like extended hospital stays and skilled nursing. A well-thought-out LTC policy can transfer the financial burden of care to the insurance company without wiping out your retirement savings. However, carefully consider the cons of LTC insurance. Annual premiums can be expensive, ranging from $1,000 to $3,000 or more per person if you start in your 50s, depending on the policy's features. Letting the policy lapse at any point wastes money previously spent on premiums. The extensive fine print on LTC policies can exclude benefits that you thought were due. For example, many policies contain exclusions for certain health conditions and may not cover all types of long-term care services and facilities. Some purchasers of LTC insurance never need long-term care, meaning they end up paying years of premiums for little or no benefit. LTC insurance can offer protection and peace of mind, but it is critical to discuss with a financial professional when deciding if this method best fits your current situation and expected future needs. Set up a dedicated investment account only for long-term care expenses. Investors with the means to do so can self-insure by setting aside a portion of their investment savings for medical expenses. Investors will not be reliant on an insurance policy to cover expenses and will be able to use any remaining balance for other purposes. However, keep in mind, all normal investment risks apply, and it is entirely possible that your investment savings will not be enough to cover all healthcare expenses. Use your home equity. Those who own their own home can hold it in reserve for long-term care, tapping it through home equity loans, reverse mortgages, or by simply selling the house. Obviously, the viability of this option is entirely dependent on how much equity you have in your home and how high your healthcare expenses are. Self-insuring through investments or home equity alone is a strategy that is best for those with substantial assets, since falling short could mean having to rely on family or Medicaid. Those who worry that their assets may fall short or intend to leave a legacy should consider alternative strategies to ensure high medical expenses do not deplete their assets. Forecasting what your actual healthcare needs and medical costs will be is difficult. If you have not begun to plan for your future needs, now is the time to start. By beginning the process early, you have access to more options and can plan your retirement more effectively. Early planning is especially important for those with existing illnesses or family history of health problems. But if you're settled into retirement without a plan, there's still something you can do. We believe second opinions saves lives. At RGA, we offer free virtual second opinion sessions to discuss and evaluate your current retirement strategy. We also offer free virtual financial preparation sessions to help you customize and design your ideal retirement plan. Whatever your circumstances, you can take steps to protect yourself and your loved ones from the threat of devastating healthcare expenses. To learn how you can avoid the negative impact of rising healthcare costs, click the link below, call 1-800-467-8152, or email info@ronaldgelock.com to schedule a time to chat about your financial health.